Hello, many of us and most of us have a dream to buy a home, and generally, we don't have that much amount because we select a property which is sometimes in crores or lakhs, and we cannot afford the full amount. So we go for something called as home loan. So in this video, we'll discuss what are some basics, the kind of various loans that are there, and the main part is that what are the various hidden charges that can trouble you later, and whether we should go for private or public bank. Both have their advantages or disadvantages. I recently discussed with my friends and came up with all this. So if you're coming for the first time, do subscribe to the channel. So let's begin. So you can stay connected with me on this. I have all my YouTube, LinkedIn, and all the various channels that are there. This is my name. So let's see that what are the various kinds of loans that are there. So this would be the agenda. You can forward the video based on, like, if you already know some of the things we'll discuss, and if you have like anything, if I'm telling not correct, you can mention that. I'll mention that in the first comment or the description of this video. We'll see. So let's begin with the fixed interest rate loan. So what happens in this? They'll decide that the percentage in the starting, and that remains same throughout in your home loan. So if you have taken a loan of 40 lakhs for 20 years, and in the initially it will be decided that your fixed rate is 10%, and you have to pay out through that. So what is the disadvantage over here is, like, if the normal home loan rate is 8%, here you'll get something extra because in the future this 8 can become 6 also, and this 8 can become 12 also. Right. So because you are opting for a fixed rate, bank will not charge you 8, they will charge you 10 or even more. And some other charges will be applicable on this, which might not be applicable on other loans. And the other one is variable interest rate. So generally this one depends on the repo rate of the set by the government. So if the repo rate is 6, then the loan rate is generally 8. So if in the future this will become 4, then your loan will become 6. And if it goes to 2, then your loan might be something else, because there is a factor which bank decides, and then this final things come. This is from the RBI. So in this variable interest, so few years back it was 6, nowadays it has 9, right? The home loan rate in this variable, and it can go to 12 in the future, or it can come down to 4 as well. So most of the banks provide this only, some banks don't provide this, right? And there is a also this one also available, but less people opt for this, where you have both combination. And there is a one way which many people have asked for or have informed that this is also one of the good loans that are available. So I'll tell you about this in overdraft. What happens is they will create an account for you, in which every month or whenever you have money, you can deposit that money, or you can treat it as your saving bank account, right? So what will happen is, suppose you got a bonus or something, so you can put 2 lakhs in this amount. So then what will happen is this will reduce your interest. So if you have taken a loan of 40 lakhs, then generally for 20 years, then 40 lakhs would almost be the interest for that for 20 years, right? So let's say you got 2 lakhs. So if you invest 2 lakhs in this account, then you'll not have to pay interest on the whole amount which is pending. So they will reduce that 2 lakhs, right? So you can say that it is the same like prepayment. But the advantage over here in this kind of loan is that you can take this back, this amount. Suppose next month or after 6 months there is a marriage in your house, then you can take out 1.5 lakhs again. Like, since you are reducing it, they will charge interest on the remaining balance. So it's, but the a little disadvantage is, again, like here the interest rate would be more because they are giving you this facility. But it's good for the business people generally, like with like they don't have a fixed cash flow, right? So generally service people have a fixed salary, and so, but yeah, some people have recommended this also, like even if you have fixed salary, you can take advantage of this, like you can pay your phone bills and all. So whatever you are depositing in your saving account, instead of saving, you can put it in your loan account, so that less interest is charged. So do check for this. So SBI have a plan called as SBI Max Gain, which many of my friends have told that they have taken advantage of this. Some people say that Like if they have extra money, they will go for that and they will deposit that extra money in mutual funds maybe. So it depends on you whether you want to go for this, but this is a good option to check for. So these are the four, at least I have seen that, where we have fixed, variable, both, and overdraft facility. These are some fixed charges which every bank would charge you, like interest payments, right? You'll have a EMI for every month that you have to pay, and like processing fee, so you can keep a special check. Sometimes it's a percentage, like 1% of the home loan that you are taking, or some banks charges 10K, or sometimes they waive off, so you can check for special offers. For some months they will waive off, as I was talking to SBI Bank for till 31st March this year in 2023, they have waived off this fees. So you might not have to pay. Sometimes this amount can be big if it's a percentage, even if it is fixed, like these are some charges. So this every bank will charge you legal or assessor charges. Someone will go to the property and they will check that whether it is up to the mark. They will ask for the map of the property, or like the government which has approved it, and they will check that whether you have made it properly or not. So sometimes it's like 6,000 around, this would be. And if like you are buying a property from big firm and all, like sometimes they have already connections with the builders and all, and so this will be automatically done. Like for example, in Hyderabad we have a Parna, and also maybe they might not do that again and again because they have already assess that. But yeah, for individual floors and builder floors and all that stuff, so there will be a legal team that would be coming. One person will come and who will do the analysis. So these are fixed charges, and you have to pay this. Similarly, we have, these are kind of similar charges, or bank can just give a different name, so look for it. And better to have an email from the bank, where they should tell you that which all charges are there. So there is something called as insurance cover for property and for loan. So for loan means like if you have taken for 40 lakhs loan, right, or 50 or 60, whatever, or 1 crore, right? So what will happen is something happens to you, then the bank will take it from the insurance and you will not have to pay, and they will give back the paper to your family or somebody. But some people say that better to go for term plan, right? You can bring this amount in your term plan because term plan is for life, whereas for this one you will pay the amount only for 20 years and all, right? So better, in case you die, you have a term plan of let's say 2 crore, then those 50 lakhs your family can give for this loan. And sometimes some banks ask for property loan. So for example, because of earthquake or something, the property got damaged, then in that case what bank can do, right? So but I think as I know that these are not mandatory as per RBI, right? But they still add this in your home loan. So you can write on a paper that I don't want this, and then you can save this amount if you don't want to go for it. If you want to go for it, you can ask for, like some bank provide that that you should buy it for 3 years or 5 years or 10 years. These options they'll give you, but you have to ask for it. And there is stamp duty that you have to pay. It could vary, like it can be 4,000 or 6,000 based on the amount. And there is a special charge called as mortgage amount. So in this one, what happens is that in case you are unable to pay the loan, you don't have amount and also you are giving bank the rights that they can sell the property. So in some states it's not mandatory, in some states it's mandatory. So you can ask that who will pay for that, because it can be a significant amount, like you'll have to pay for it. So just check all these charges that banks have. So this will help you because I have gathered this from various sources. There can be some other charges, but these are most of them. In the next slide, we'll see that what are the variable charges. So this is the most important slide in this whole video because this can save you and help you in deciding that whether you should go for private or public sector banks. So what happens is that many banks charge you prepayment penalty, especially in fixed. Like, so for example, let's say you got 10 lakhs from somewhere, maybe you got a bonus or you got a hike or you got a promotion and all, and you got 10 lakhs, and now you are submitting that in your loan so that you can reduce the tenure from 20 years to say 15 years because you have reduced the principal amount, right? So some banks charge you prepayment penalties, so they might charge you 1% of this amount, right? So which can come as a lot, maybe even if it is coming as 10,000 or 1,000, why you have to pay for it? So mostly this is zero in public sector bank, but it's zero even in some of the private sector banks. So do ask them that if there is prepayment penalties or if there are any condition like some even for loan closure also, for example, like you want to close the loan in 12 months, right? You have got the money and you want to pay for it. So some banks have a condition that at least you should pay the loan for 12 months at least, and you can't close it immediately, right? But so in that case, they will charge you. And what happens is, please note that they will charge a lot of interest amount. Like if your monthly EMI is 40,000, in that around 32,000 like that, they will charge you interest. So what happens is at the end of 1 year, they are charging you the interest for almost 3 years. So that's why people say that in the whole duration of your home loan, if you in the first 5 or few years, if you can pay the maximum amount, you can save the maximum, because here they are charging you the maximum interest and later on they take the principal amount more, right? And this is also one of the very important factor called as loan reduction charges. So what happens is, and this will play an important role, because let's say you have a loan of 20 years, right? So you are taking a loan of 20 years, and uh, mostly let's say you are taking from a bank which depends on RBI repo rate, right? We'll come to the next slide and see that there are some home loans which does not depend on this, right? So repo rate generally changes every year, and sometimes it changes multiple times in a year, right? So let's say that in 20 years it got changed at least 15 times, right? So whenever it changes, and especially whenever it reduces, right? Let's say that it is reducing 8 times in out of 15 times, right? 8 times it got reduced. So your home loan should get reduced as well, right? But private bank, they don't do that. They will not reduce it automatically. They will send you an email, and I have seen that email. Some people have shared with me, and I personally visited one of the bank, and they clearly told me that they will reduce it. You have to pay 1100 rupees, right? So if you are paying it 8 times, 8800, you are paying extra, right? And that too, you have to tell them, then they will reduce, right? If you don't have time, you are ignoring their emails and all those things. So if the repo rate has reduced and your loan should become from 9 to 8.5, you are paying zero point 0.5 extra, right? And on top of that, firstly, you have to keep in mind that whenever they are sending mail, plus you have to pay this extra amount. And in one of the bank, it is 2000 rupees, right? So it is 16,000. And considering if it happens 15 times, then you are almost paying your 1 month EMI extra, right? So these are the smart ways by which they are charging you money, right? They are telling you, sending you email, get reduced. So you'll think that, okay, they are telling you that, but why they have to tell you? In case of banks like SBI and PNB, they reduce it automatically. They will not charge you this amount. So if the government is reducing, maybe they will take some time. So government is doing in March. So from April or May or June, they will automatically reduce your home loan percentage, right? So in this is an important factor, and most of the private banks are charging this. If it's percentage, it's really bad. If it's fixed charges, still it's bad, right? Why you have to pay to get it reduced? And even let's say that even if the government is not reducing, sometimes what happens is people go to the bank and tell that, okay, reduce my amount, otherwise I will transfer my loan to some other bank, right? So in those cases also, they will charge you the this loan reduction, some fees they will charge you to reduce it, right? So, and generally government banks have a fixed formula by which they do it. So now coming to the important discussion from where it came in my mind and it all started. So you can go for a government bank with have a good low NPA ratio. NPA is non-performing asset, right? So those banks who are doing a good lending, you can check these things, right? And mostly people have recommended that they would like to go for SBI because of the trust and assurance they give. And the special word is scrutiny over here. So what happens is, like, sometimes when you buy a property and you don't know about the papers, and also SBI bank, they do a lot of scrutiny so that later on you'll not face issues. So it's better to get the paper check properly, because sometimes the private banks don't do that. That's why maybe you'll have to go maybe a number of times maybe to the bank. So a little inconvenience in the starting, but you have the trust and the scrutiny of the papers and everything that they will do, and they will get your papers also done, right? So if their legal team will go of SBI, and if there is something missing, they will ask for it, so that it's good in the future. And as we discussed in the previous slide, that they will reduce when a repo rate is reducing in the first, and they will be the last when repo rate increases. Also, they will take some time to increase it, right? And somebody has sent this who have taken loan, that they would want to switch from this bank to this bank, and somebody have taken loan from all these banks. I have hidden their name, but you can understand them, right? But what they are saying is that SBI has the best process, right? The person has taken loan from all of these, right? And they have written a bad thing about private banks, that they are the first to increase. So if repo rate increases, they will are the first person to increase, and they are the slow to reduce. So this is negative for you, right? If instead of 3 months they are taking 4 months to increase it, for 1 month you are paying extra. And SBI does a great documentation. And one more thing which I would like to tell, which I came to know, is that, so for example, that your EMI goes on the 10th of every month, right? And let's say you deposited some money on 21st. So as I have heard from the public bank, that what they were telling is that private bank, what they will do is they will wait for the next month of the 10th, and on that fixed date they will consider this amount. Let's say you deposited 1 lakh, so they will not consider on 10th, because 10th has passed. Let's say today is 15th, right? And you have done on 21st, so they will not consider your amount came on 21st. They will wait for the 10th of next month to come, then they will consider. So what's the disadvantage is that banks like PNB and SBI, uh, in their app, they will create a loan account for you, and you already have, let's say, a saving account. So as soon as you push some money from here to here from that day itself, right, their system will calculate and they will reduce 1 lakh from your principal, and the other EMI you would be charged from the same date, right? But private banks are little smart. What they do is they have a fixed date. So this I have not confirmed from private bank, but it was told by the bank managers at these bank, that the day you do it, their system will reassess, and you'll have to pay interest on that amount. So here you are getting an advantage, right? On whatever date you have the money, you can put it in your loan account and amount will reduce. So this is also one of the important factor, apart from the one that the prepayment charges and loan reduction charges. So these are the three things, plus the uh, scrutiny that they do. Because of this, I feel that public banks are better. If there is a there's a problem in the property, then and you have to take the loan, then you might have to go to private, right? And some people have told that they are doing good. But yeah, if you can look at the points that I have mentioned, especially 4 points are there. One is the scrutiny thing, that they do better. The second point is the loan reduction charges that they do, right? And thing is that they are first to increase and slow to reduce. And the last thing is that the interest rate day calculation. So these are the important four factors, plus other variable charges you can ask for it. And now to moving to the last part of this video, thing called as NBFC. So what they are not regulated by RBI. So what happens is they don't follow the repo rate thing, right? So initially, like, they will tell you we are giving you a loan on 5%, so you will get attracted to this, right? But they follow something else. Even HDFC has a branch like HDFC, some loan department, one of them, which follows this, right? So maybe because of that, some people say that don't take from certain banks or like this NBFCs, right? So just check that whether you are taking from the bank or the NBFC part of those banks, because you will have to check that what are they really following, because initially it's 5%, then in the 9%, like people have written this kind of, like, so I have taken these statements from the people who have taken the loans. So what they say is that initially to attract, maybe bank will give you better, right? But after a few years it is almost the same. So in my opinion, public is still better. So like if you can get it and if you know somebody, so in my opinion public is better than the private, because of all these factors and because of all the people I have heard. But take your decision, and if I have told anything wrong, please do mention in the comments, or anything if you would like to add. I'll also try to publish a blog where I'll keep on updating the information as I get the comments to keep it updated. So do look at the video description and the comment. Thank you for watching. Do like and subscribe the channel.